Hey everybody, this is Jose Blasco. We are about to get started. Please go ahead, sound check as we always do before we start the session. A quick message on the chat box we do so I know you hear me well and all is ready to get started. Please go ahead. Quick hello in the chat box when you have a moment. Everything looking good on my end, so I think we are indeed ready to go. Very good. 19 seconds. Mario, how are you? How are you, everyone? Nice. 10 seconds to go. About to get started here. Here we go. My friends, we are live. Today it's Aug-18, 2021. My name is Jose Blasco. This is Options with Options. First thing first, disclaimer. I am highlighting the disclaimer on the upper left side of the screen so you can read it carefully. This is indeed important information. I always say it. So please do not skip it and read it all. I am counting on you. Options with Options means that we're going to be trading options, isn't it? And the agenda is about first looking at the market environment so we understand what's happening out there. Then we'll look at trade review, meaning trades that we already have running, see what's happening with them, and talk about trade management if something needs to be done. And from there, we'll move into trade execution, which is basically finding new opportunities, planning your trades, discussing all the setups and the parameters, and from there execute those orders. So that's the plan for today. And we're going to start, as I just said, looking at the markets. We'll start with the S&P. How are you, Siderman? It's good to see you. So let's begin. Okay, so what do we have with the S&P? So let me zoom in here. Okay, so what do we have with the S&P? Well, we have a dot. It's not a thick dot. It's a thin. So the climate is not confirmed. You can see even it says number 0, meaning that we've been trading on the other side of the moving average, meaning that the climate is a true risk. Okay, and the reason it's not surprising, we've been in this climate for multiple candles, more than 7, which is what statistics suggest. Actually, we saw that already last week. So this is a climate that really had stretched a lot, more than what statistics would have suggested. But you can see now a real threat for this market to change direction with price again back under the moving average. Okay, the EMA is 443.73. We are currently trading at 61, which is below the EMA. So again, directionally speaking, we can see there is some power to the downside at this moment in time, which is obviously not surprising given the fact that the climate has lasted for too much. Okay, so from a call and put analysis point of view, we can see puts are more expensive than calls. This kind of like trend where the puts were gaining more value started on 8-9, which was kind of like in the middle of this climate propagation. We started seeing that a little bit. It's not like it's too much, okay, because the implied volatility for the calls is 11, the implied volatility for the puts is 11.67. So the difference is not like it's too much, but it is indeed a little more than the prior days. And, again, this may be related, I would say makes sense, with the fact that the S&P is moving down. Okay, so what to expect? Well, statistics suggest that we should have a change of climate, and that climate to last for a couple of days. So here you can see an example of one candle, here 3 candles, here 4 candles, here 2 candles, here 2 candles, red color each. So in other words, we should expect something like that, 1, 2, 3 candles on the way down, and from there go back on the way up. That is what we should expect based on climate. Okay, and now to me there is something critical in front of us, which is that UFO. The fact that the UFO is there may end up pushing prices higher, and we may not change climate, and the climate keeps extending, even though that would be a bit against what probability suggests, but the UFO is there. We cannot ignore that. Okay, now if price goes below the UFO, okay, there is a pretty large distance from 444 to 435, and therefore it should be quite easy for the market to fall hard to the downside, at least to get to 435 or 432. Okay, so let's see what's going to happen. Again, we'll be reviewing that tomorrow. We'll be back together in the room So I guess that tomorrow we will get the answer to the question: has the climate changed, yes or not, and is it confirmed or not, right? So we'll have to wait until tomorrow, but the way it's looking at the moment is that more likely than not we may have this change of climate. Okay. Last one before we fully complete this conversation. It's looking at the calls and the puts, and we can see 1.4, 1.4, 1.2, 1.2 are the ratios. A little bit more calls than puts, but really 1.2, 1.4 is very small as a difference in ratio, so it doesn't mean too much. Also notice here, instead of looking at the 3-day average of the calls and the puts, which I have on the right is the 3-day average, here I'm looking at the 5-day average, and same thing, we also see the puts to be higher than the calls. So again, there is bearishness coming in. Bearishness likely going to push the climate to be red and last for a few candles. It's not like this basically suggests the end of the world is coming, but indeed we may see a little bit of a correction. Okay. Also notice how we are quite far from surpassing the averages. Okay, so again, what we see from the options data really is not meaning too much at this moment. Just like the shape of the candle is a little bit of an indecision candle at the moment, we get to see a bit of the same when looking at options data. When looking at the VIX, how are you, Joanne? It's good to see you. Very good to see you, Joanne. By the way, I don't know if Jeff Lowe is in the session with us today. Jeff, if you are with us, let me know, because I sent you an email earlier, and if you didn't read it, it would be nice if you could read it, so then you could provide some answers during the session so we can talk about it. Okay. But anyway, when looking at the VIX, we can see the VIX is currently trading at 17.92. The next UFO, the red color UFO, is all the way at 23. So plenty of room for implied volatility to grow. But there is also a decent amount of room to fall from 17, almost 18 to 16, because the green UFOs are not as far as the red UFO, but they are quite far as well. So in other words, it's really a day where we have no idea what's going to happen. We need to see that climate to define itself on the S&P, and that will also probably reflect on the VIX. But at the moment, it's kind of like anything could happen. Okay, so we will need to deal with that condition as we are looking for trade opportunities. Okay, good. Now, when talking about trading opportunities, I'm going to move to TradeStation here for a moment. So let me move to TradeStation. We have a few trades to be reviewed. And by the way, feel free to comment or ask questions if you have any question, guys. Feel free to interact, okay? Actually, we should make interacting mandatory, isn't it? Because, it's obviously I'm supposed to be the one spending most of the time talking, right? But, sometimes you guys spend a lot of time with no interaction at all, and it would be really appreciated if you guys could be a bit more on top of your chat box, a bit more participative. That would be great for you, and indeed for me. I would certainly appreciate that. Okay, and this applies to everyone. Okay, so in the private room, on our website, on the YouTube channel, on everywhere, right? On LinkedIn, etc. Anyway, so trades to be reviewed. We start with SKT. We said this trade is likely going to end up, badly, and again, this is exactly what is looking like. We were talking about it last week here. We saw a little bit of strength coming in, so we said, well, maybe we have a nice push and we go above 21. We said it's extremely unlikely, but maybe that happens. Well, guess what? The push was strong, but happened in the opposite direction. So this trade, it's almost a sure thing. Nothing is a sure thing, but this trade is almost a sure thing that it will end up as a loss. Expiration date is 2 days from now, August 20, and therefore it's currently trading at 16.68, being above 21 on expiration. It's something that really we should not expect. So I'm looking at SKT, and we can see here that this is a trade with a total risk of $57. It cost 67 at the beginning, but then we added 10 cents. So total cost 57. So it's looking like we're gonna lose 57. And I don't think I need to comment much more on that. It's what it is. Okay, very little to do here. FSLR. Okay, that's a trade that is working well in our favor. So we got in on that particular date. It was August 4. So FSLR gave us an opportunity to enter, and from there it started moving very nicely in our favor, and also very strong move against us, and now pretty strong move in our favor again. Okay, so again, why is that? Well, if you recall, that climate was quite stretched. okay, we should expect it's healthy for the trade to progress, to see a little bit of red. Statistics suggest 5. Remember, we had multiple ingredients behind FSLR to work in our favor, such as the grouping of those stocks, the sector, the industries. All of this was in our favor. So again, not the end of the world to get to see the stock went against you, and not a surprise to see the stock is back in business. At the same time, it's indeed very likely challenging your trading emotions if you are in this trade. Maybe wondering, should I have got out? Should 102, that is the target, be too far as a target? So of course, I'm sure you are being hit with a lot of those thoughts, and maybe even more. Please phrase your thoughts in the chat box if that's okay, so I get to see how you're thinking. Uh, there's no right or wrong, by the way, okay, because we are all human and we all have a different mindset, okay. The key is that whatever thoughts you have to control that and give priority to your trading plan instead of your human emotions, okay, which is easier to be said than to be done, especially with large accounts. But anyway, so it's all looking good for FSLR. FSLR, I have it there on TOS. You can see it's currently paying $118 per contract. We saw this to be 200 or over 200 last week. So again, probably challenge your emotions when you saw this dropping maybe to 50 or something like that, whatever it was. But again, we are in a trade where we expected the target to be somewhere in September, isn't it? And therefore, that's what we're doing. Yeah, so 102 is what we decided the target to be, I believe. Let me see if I can find the chart that we used to plan that. I believe it was here. No, well, I don't have it here. Yeah, I don't have it here, but I believe that basically the math was basically, the question was, if we go above that pivot high, where are we going? Okay, and that was the answer. Okay, so 102, that was the target. Okay, what that we're shooting for, also coinciding with the UFO. Okay, and you can see how the UFO did its job, right? So price kissed that UFO, and the price is moving back down. I mean, not a surprise. Okay, but again, the whole industry sector, etc., is in an strong trend to the upside, and therefore we want to take advantage of that. So we need to let the trade do its breathing, okay, and we gotta manage that. Remember, in an up climate, sell on-field orders tend to be canceled. So while we have a UFO there, it's reasonable to expect price to penetrate a bit deeper. Even we'll have some reactions. Ultimately, those sell on-field orders will tend to either be filled or canceled or both, and therefore price will continue progressing in that direction. And our job is to maximize our gains. Okay, so I talked a lot about this last week. I don't think I need to add more. Remember, I'll add one last thing. Remember, we are also dealing with multiple positions at the same time in a portfolio, isn't it? So maybe you entered a few shorts last week. So as the market was going down, you hit some targets with the shorts. Now you're back in business with the longs, and you keep playing both sides of the market with a little bit of a hedging concept. Okay, so that's the idea. So you need to let your trades breathe so you reach further away targets, okay, and not to be too quick on getting out just because you see a bit of green and you get emotional about it and you get out. Okay, cool. So what else do we have? Back to TradeStation, GLW and Caterpillar. And by the way, here I need to share something with you guys that is going to have us close those two trades actually. So let me show. Actually, it's going to be better if I show it on top. So GLW. Okay, so if I go back to top and I show you GLW, here, GLW, here we go. So this is our trade. Okay, so we enter this trade on this particular day. Okay, and the idea was price to stay within this upper line and this bottom line until the expiration date, which is located here in October 15. Okay, well, again, I need to share something that, in one hand is a bit funny, in the other hand is not funny at all, which is the fact that, as you know, we are in final phases. To be honest, top is ready, my friends. Okay, so this is the good news I have for you. Top is ready. So probably we'll have all ready for distribution maybe tomorrow. I'm not sure, but definitely next week for sure. Okay, so it's ready, my friends. Okay, so it's a very big news for me to share. But guess what? We were still working with tweaks and final adjustments and so on. And so last week, actually, we did an update, for internal use, as you know. And actually, this tool, which is called the probability cone, was actually not well adjusted. We had an issue with one line of code, to be precise. And the way the cone was calculating the range was actually inaccurate, unfortunately. So, in other words, the range we calculated was less probable than expected. And if you think about this expiration date, you can see how the red line surpasses the purple line. So, in other words, the range that we selected was good from a historical volatility point of view, which is the blue lines, but not from the red line point of view, which is the implied volatility. So I was not shooting for the worst case scenario. So something I'm going to ask you to do here, guys, okay, and we're going to talk about how to do it, is we're going to just close those trades. Probably we'll catch a few bucks by doing it, or break even, and then we'll restart planning trades the way we should. Because again, I had wrong data on the screen last week, given the fact that I've been for the past weeks daring enough, if you wish, to utilize a tool which is top, which was not officially completed. Okay, and I guess it was still a good idea to do it, but in this case, I do need to acknowledge that I detected an anomaly. Okay, and I wanted to bring that to your attention. So you know that when it comes to GLW, same happens with Caterpillar. Again, we got a problem with a cone. Okay, and therefore the calculations were not correct. So you can see now how probability is below the bottom line, and we're gonna have to do something about it. Okay. So the one thing that we need to do really is to close the trade. Okay, and GLW is making $3. Caterpillar is losing 5.5. So it's kind of like both are, let's call it, breaking even. Okay. Again, while the probability range, the probability cone suggests we're gonna break the range, there is no urgency on getting out. Okay, and therefore it's okay if you get out in 1, 2, 3, 4, 5 days. You don't need to get out immediately now. But this trade not meeting 100% of our rules, obviously is a reason for us to cancel this trade. Okay, and again, that's my bad, and I feel not very good about that. Okay, but I do need to bring that information to you guys. Okay, so how to close it then? Okay, well, you can see, for example, GLW is giving you $3.5 of profit. Okay, if you were to do the math, okay, let me bring a calculator, and you do the math, which is the trade price column, right? So now you can see the prices at which you were filled. So this trade is a trade where you paid 33 cents and 27 cents, and then you got paid 43 cents, and then you got paid 38 cents. So this is okay. I have my keyboard set up as different language, and I was not typing the right figures. So 27 positive plus 33 positive, and then negative, which is credit 43, and negative because it's credit 38. That means that we collected $21.21 to do this Iron Condor with GLW. At least in my case, you may have got a bit more, maybe a bit less. Siderman, you did not get filled on CAT, so you know what? That's a good problem to have in this case. Okay, I'm not proud of it, but yeah, in this case, it's a good one. So I'm gonna create a closing order to buy back the Iron Condor and close it. But of course, I want to do it for less than 21. Okay, so I know it cost me 21, so I want to do it for less than 21. And again, here what I'm gonna do is, because we got 4 contracts, so I'm just gonna try to get 4 cents less. Okay, which is 17. Okay, and I'm just gonna place a good till cancel order to get out at this price. Okay, which I may get filled, maybe later in the week, maybe Monday after the weekend, where we get a bit more decay. Again, there is no urgency to get out, but I want to get out of the trade just to be disciplined, in the sense that I did the wrong trade. Okay, and therefore just let's get out. Okay, I'm not gonna get hopeful or greedy about this trade now. I'm just gonna look at myself and just do good practices to build up the right habits. Okay, and this, it doesn't matter if it's a demo account or a real account. I encourage you very much to never do actions that go against your plan, because you build bad habits. Okay, and bad habits will cost you money at some point. So I'm just gonna confirm and send. Okay, at 17 cents for the one with GLW. And so here's the order waiting to get filled. And for the one with Caterpillar, I'm going to do some math. This one, the market moved more against me, So here I may need to be a bit more patient, okay? So 101 plus 76, that's what I paid, and then I got paid 162, and I got paid 111. Okay, yeah. So that was 96 cents. So, same story. In order to close this trade, I'm going to create a closing order to be a maximum 96 cents. And because it's 4 legs, I'm just going to want to eliminate a little bit of commission pain here. So I'm going to make it 92. Okay, and I'll make it good till cancel. So those two orders will sit there. And I believe, okay, unless you have another crazy move on those stocks, so I believe that it's quite likely that we'll get filled, either towards the end of the week or beginning next week, something like that. We'll talk about it tomorrow again and reassess. But I'm just gonna leave the orders there. Notice again one more time, I use a good till cancel order, okay? And that way, if I don't get filled today, the order is still there tomorrow, so I don't need to replace it, okay? Joe, the spread was too wide to get filled. I got you, but you know what? The very wide spreads sometimes they surprise you too, Joe. It's a matter of the time of the day and how much trading took place that day. Because in the end, market makers make a living out of getting the trades filled. So if let's say it was a low volume day for the strikes you selected, and which is the reason why spreads are wide as well, right? And but let's say now it's after lunch in New York, close to the end of the trading day in New York, and those market makers they realize that they need to do something about a bit more trading activity because it was a slow day. So there are days where you will get filled at incredible prices that you will not expect when you see those wide spreads. Now this doesn't happen all the time, doesn't even happen often, but sometimes it does. So again, the way to approach this is use a day order. So you leave your their orders for the whole day. So if anything happens during the day that allows you to get filled, then you do get filled. And if nothing happens for you to get filled, then that order is gone automatically at the end of the day. Okay, and then that's it. Yeah, I got it, Joe. I got it. And sometimes it is, and sometimes it's not, right? So that's what it is. But yeah, again, that's the process. Okay, that's the process. We need to fight to get the fills we want, and if we get it, great. And if we don't get it, there are more stocks to be traded. Okay, cool. Anyway, so this is all when it comes to trade management and the various things that I needed to comment. Just looking at the various chat box, and it seems that we are all good. So let's continue now, and now we're gonna get into looking for trades. Okay. So since I just killed the iron condors that we had, so what I'm gonna do is I'm just gonna start looking for iron condors. Okay. So what I'm gonna do is first, remember advanced option scans. I'm gonna start looking for high implied volatility. So I'm gonna start with mid greater than 80. Maybe it's better if I float this window actually. Okay, so you guys can have a little bit of a better view. I'll put it here in the middle and stretch it so you guys see everything. Here we go. So now, scan number one, looking for expensive options. Scan number two, parameter number two, at least $34 per share. Stock filters. We're not going to filter based on stocks because I am looking for non-directional opportunities. So I don't care about stock rotation, strength, nothing. Scan list. I'm going to import my penny increment options list, which you guys know I use for years. Again, you don't need to, okay? But normally with that list, you have an easier time getting filled, even though not always, like Joe just commented on the chat box, okay? And then here on the next section, where we look at strength, we're gonna make sure that our daily strength is neutral and our weekly strength is also neutral. And we will also be looking at stocks that don't report earnings too soon. Okay, so we look at 3 days and nothing for the range and nothing for the climate. Okay, very good. So that's what we're looking for now. And when I scan like this, I end up with two symbols, which are the initial two symbols that we're gonna use. Okay, so I'm gonna click on the first one in the list. ARNC earning dates are November 4. CRM will not work because August 25 is too close. Okay, so the CRM will not work, but ARNC with November expiration date may work. Okay, now this is a relatively cheap stock. It's only $35. So unless we got extremely inflated premium, I'm not sure. It's pretty okay from an inflation point of view. But notice that the stock has been moving faster than the implied volatility. We know that because the red line is within the blue lines instead of beyond. Okay, so there's been times where the stock is moving faster. This is probably the case. Okay, there's been times where the stock is moving faster than the premium built in the options. Now there is something I really dislike here is the fact that we don't have weeklies. Okay, and therefore I'm just gonna pass. I could, okay, but then I cannot. I won't have too many options to do my tweaks throughout time. Okay, so I'm just gonna choose to pass and look for other opportunities which probably are gonna be better. Again, CRM, I'm gonna pass on it. August 25 is way too close, and between us, I could have changed these to be less days. But also sometimes you have stocks that are very pricey, okay, which is the case of CRM. Stocks that are very pricey, and maybe you can do a 1 day to expiration, 2 days to expiration type of trade. Okay, so but again, those don't allow you to do any sort of adjustments because everything happens a bit too fast. Okay, so again, I'm gonna look for other things, which can be traded with a bit more relaxation and also give us a bit more excuses in the room to talk about trade management and improving those trades through time. Okay, so the next type of selection for implied volatility I'm going to look for instead of implied volatility mean is implied volatility mean minus historic to be above 2 standard deviations. Okay, so these may give me more or less symbols. In this case, it uncover Netflix, okay, with earnings on October 19. Okay, so let's take a look at Netflix and let's see what happens. Okay, so earnings all the way there. Okay, earnings all the way there. Implied volatility, you can see here there is a spice. You can see how the red line is above the blue, so there is some premium built in those options. Okay, and therefore we have something that we can work with. Okay, so let's begin. Okay, so the next expiration date is August 20. This is around the corner. The next one, obviously, August 27. Then we got September 3. Then we got September 10. So again, which one to use, right? Which one to use? Well, everything got pros and cons in life, okay? But in the end, you will also depend very much on the UFOs, okay? So you have two ways to approach your encounters, which is to pick a date, okay? Maybe you look at, September 3 and draw a range from here to here, and that would be your statistical range for September 3, okay? But you don't know if you got UFOs or not at that price point. So maybe another way to approach it is start from the UFOs, okay, on the 55-minute time frame, see where your UFOs are, and the probability in this case is 58, and from there, define your trading zones. Okay, so that could be another way to approach it. It's all fine. I personally prefer to start from the statistical range. Okay, I prefer to start from here because I am also looking at other UFOs than maybe on a larger time frame. So let's say I got UFOs on the daily time frame, and now I dropped to a lower time frame, and you also got UFOs. It's kind of like stars and the moon and the sun lining up, so it's great. But the other approach is good too, because in the end, as long as you got at least 2 UFOs above and below on the lower time frame, that's the only thing we're looking for, isn't it? The old scan has Cisco. Very good. We can certainly look at that too, Siderman. Not an issue. Okay, just looking at the other chat box. So anyway, so here's what we got, okay? And we got, for that date, we got that particular range. For that date, this would be the range, okay? So for the next date, this would be the range, okay? Right there, okay? And, again, now we know based on statistics where that market should be, right? So now with that in mind, let's move to the 55-minute time frame, and now let's understand what is it that we've got. Okay, what is it that we've got? So now notice how I got UFOs above, but I don't got UFOs below, and I don't have that many UFOs above either, right? So why is that? Well, because I may need to load more candles. So let's do it. I'm gonna go to my format menu, and where it says load 500 and make it 5,000, we'll just need to wait a bit for the data to be downloaded. And that's it. And now all the UFOs are available. And as you can see, now we have more. Now, not below. Okay, so why is that we don't have more below? I believe there was market data below. Oh yes, we have to go so far in time. Far in time. Yeah. Okay, so let's take a look. Oh no, actually I had it right already. Oh, wow, those UFOs are so far away. Wow. So okay, so let's do this because this is our bottleneck is gonna be there, right? So if this is the UFO that we're gonna rely on, there are two there, okay, apart from those two. So if we're gonna rely on those UFOs which are around 410, let me go back to the daily time frame. Okay, and of course 410 is all the way there, which allows me to use all the way to the expiration date prior, which is October 15. Okay, so this is a long-term iron condor. Okay, and again, I wish I got premium using shorter expiration dates, but it doesn't look like I'm going to have enough premium if I use shorter expiration dates. And and then the setup is not convenient, to be honest, because this is all times high for Netflix. Let me double check looking at the monthly time frame. Yeah, this is the all-time highs for Netflix, and therefore, if this is the current price, okay, and this is gonna be the top of my range, and therefore this is the distance, and this is gonna be the bottom part of my range, and therefore that's the distance. You can see how the space on the bottom part is way larger than the space on the other part. So I'm not gonna start my trade being very well centered, which is not something that we welcome um, too much when we do non-directional trades. We prefer to be more centered, isn't it? So in other words, I'm going to pass. Okay, I'm going to pass and wait, and maybe a few days from now we have more. Current symbol. We have more UFOs available, green color UFOs, and we can do that. But at the moment we don't. Okay. Mario, hey Jose, on TradeStation 55 minutes, there is a green UFO at 499. Get it. I'm just working with the data I got on my screen, okay? And the applications that we use are data dependent, and each platform will provide you with different data, okay? And by the way, I'm using right now Top for QC, which is a market data provider. If instead of Top for QC, I load Top for TradeStation, the market data is slightly different. Okay, and we've talked to TradeStation, and sometimes there are problems with data integrity, and sometimes they don't save all the data from all exchanges. So, but the same happened with QC, and the same happened with all market data providers. So in the end, there will be from time to time differences. Just like sometimes you look at TradingView, and the UFOs are a little bit off compared to what you see on TradeStation. So the same thing happened and will happen, and we have no control over this. Okay, so now if I don't have it on my screen, while I do appreciate you guys reporting it to me, if I don't have it on my screen, I just cannot plan a trade. Okay, because I don't have it on my screen. Okay, so and I know you understand that. So anyway, I'm gonna continue. Okay, and then the third action that I showed you the other day to find opportunities with good premium, if case number one mean greater than 80 and case number two historic volatility mean greater than minus historic above 2 standard deviations. If those two cases fell, the other way on how to try to find an opportunity was to look for the CIV mean to have the great percentage increase in the last 5 days. Okay, which this normally is good enough. Is the less extreme situation. That's why we normally got more opportunities. I mean, you will almost always have an iron condor ready to be taken, to be honest. But I like to start from the more strict setup to less strict because the more strict normally carries more probabilities on our end or more advantages. Okay, not always probability, but maybe more advantages. So anyway, so let's begin. We got Siena with September 2. September 2, September 22nd with JS. Yeah, I mean, all of this is good. I'm not very happy to see August 24. I'm not very happy to see August 25. So let me do this. Let me be a bit more picky with this. We're going to look for at least 10 days to earnings, okay? And now we should be fine. So let's begin with Sienna Corporation. And let's see what that stock has to offer, okay? So yeah. So you see, for example, in that case, for example, you got red UFOs, coinciding with that expiration date. So September 3 or or August 27 looks nice, okay, because it's kind of like if we find UFOs on the lower time frame and you have UFOs on another time frame, it's more odds. So I like to start, with the daily time frame for that reason, okay, but it doesn't need to be like that. You can also start from the lower time frame. So, and I'm gonna start with this one, okay, September 3. I just clicked on the wrong tool. I meant to use this one. So we're going to start with September 3 expiration to today. And we will also do August 27 to today. So now we know our statistical range based on the worst case scenario out of implied and historic volatility. So with those values in mind, now we drop to the 55-minute time frame. Look at the probability, and 47.87 is not good enough. So what we're going to do is use 89 instead of 55 in the time frame. If you recall my explanation last week, isn't it? We're just going to be pragmatic and keep looking for. Okay, oh yeah, I know. I remember now. I got so many bars that are being loaded, so this is taking time because of the download. I changed this to 5,000 bars. So I'll change the format in a moment to 500. This is good enough for most cases, to be honest. Okay, we got it there. And now we got 47%, so not good. So the next one in line will be 144. So 55, 89, 144, that's 45%, not good enough. So we're gonna go to 233. I'm just moving up the time frames using a Fibonacci progression. Should say a Fibonacci sequence, that would be the right term. And now we got 52%, so now it's 48% or better, okay? Look at the green UFOs, they are so far down. Yeah, that's not gonna, that was very Spanish, by the way. This is not going to work, not going to work. Yeah, not going to work. So we need to go for the next one, which is 377. Let's see if we can discover a few more UFOs. Yeah, I don't have red UFOs above either. Okay, so that would now move us into daily, 2 day, 3 day. Yeah, we don't have UFOs, above those price points, unfortunately. Setup is great. We're just lacking on the UFOs. Okay, no issue. Let's take a look at Tesla. Tesla reporting earnings on October 20. So let's go ahead and take a look at what is possible with Tesla. Okay, and in this case, you got UFOs there. So this is making it attractive to me to be focusing on September 10 or before. So let's go ahead and focus on that. So September 10 or before is here. Okay, September 10 or before is here. And September 10 or before is here. One, two, and three. Okay, got it. So now back to the 55-minute time frame. Okay, so we got 51% or more, so that's good. Lacking on UFOs above. Is it because I didn't load enough candles on the chart? Yes. Okay, so look at those wicks. Can you guys, talking about data feeds, guys, can you guys please look at TradeStation on a daily time frame and let me know on the chat box if you also have those wicks? I feel this is a bad tick, and this is gonna probably make us not find UFOs above. just loading data for Tesla. Looks like my internet is slow today. Okay, now, yeah, so we may have data. Okay, good. Okay, so let me load a bit more candles. I guess there is a bad tick on the daily time frame, but the intraday time frames are fine. So I will load 5,000 bars and see if I have UFOs above. We got 53%, and we got UFOs above and below. Great, perfect. Okay, so this seems to be a valid setup. I would say relatively easy to implement. So let's begin with setting the upper part of the range. So this would be the nearest UFO, right? And if I was to measure the distance from here to the current price, which is more or less here, and I was to take that distance and I was to project it below, okay, like that. So that would basically bring me to somewhere here, which is almost a perfect setup with that UFO and that UFO where the current price is very much in the midpoint. Okay, we are talking about 800 on the upper part, 575 on the bottom part. Okay, and again, going back to the daily time frame, the expiration date we are targeting here is up to September 10. Okay, but of course, if shorter term expiration provide premium enough to justify the trade, you got 4 weeks on Tesla, nothing here. Mario tradestation is fine. Yeah, so that's, you see, it's market data providers, sometimes they have inconsistencies in their databases, and it happens all the time, and it doesn't matter who they are because all of them at some point they have that. Okay, so anyway, so let's keep going. So let's build a condor, okay, using September 10 or less, using Tesla. Okay, so expiration dates, we're gonna use September 10 or September 3 or August 27. I'm not gonna try August 20 because it will not give us any opportunity to do much. Okay, so I'm just gonna leave it alone, and then we're gonna be looking at building a short iron condor. So I'll select that. Okay, and then based on those expiration dates, now we are being told that the minimum strike, distance between strikes is 2.5, so we'll get that as a minimum, and the maximum, I'll make it 10. Okay, because in an iron condor, the distance between strikes represents the risk. So if we use 2.5, it's $250 of risk per trade. If we use 10, it's $1,000 of risk per trade. Now, of course, Tesla is a $600 over stock. So obviously, shooting for very little risk doesn't make sense either, because we're not going to find any trade that meets that rule, okay? But anyway, the lesser the risk, I guess, the better, and certainly more than 1,000 per contract, I would say, is probably not reasonable. So let's go for 99 iron condors to be built. Okay, so 99 condors have just been built, and with those condors built, now we're going to add our filters. Okay, here we go, and I'm gonna load my template, which is iron condor preferred parameters. Okay, so by default I got all of these. Okay, which basically is telling me a delta not too high, so it's pretty well centered. A return on investment to be at least 25%, etc., etc. We talked about this before. So let's see if without doing anything I get a pass. Okay, and yes, it does look like a few trades pass. So let's see how many of those pass and what is it that they provide for us. Okay, so we got actually a bunch that pass. Okay, there are many that pass, including some of them using August 27. Okay, so now the question is, many of those pass, but we also have certain limitations or restrictions when it comes to break-even points. Remember, we said we want break-even points. Let me float this. So we said we want break-even points of at least, up there it's almost 800, and down here, which is 568. Okay, so 800 is the minimum, and all of those here are 700 something, 700 something, 700 something. 776 is the better it gets. So, and all of this is happening with August 27. So it seems that August 27 may not provide premium enough. So I'm just gonna remove it. update and see if with other expiration dates it works better. Okay. Let me see. 99. Update. Did I deselect? Oh, I know what's happening. I got this date here. Let me select another date. Yes. Okay. So update. Okay. Okay, so yeah, I'm having a little problem here. Not sure why it is. Okay. Maybe I didn't click update correctly. Okay, now yes. So September 3, okay? So now we are starting with September 3, sorry for that. So I just got rid of August 27. So now everything starts with September 3. And now let's see if we can get that 800 mark on the upper part, which so far it doesn't look like. We are getting all the way 785. And it failed. Yeah. 802 passed. Okay, so this one passes. Okay, this one passes with 637 below, which is even. Oh no, it's not good enough. 637 is here. We need 568. So okay, so what's the return on investment this one is given? The return on investment is 100%. Here we got 860 something. So we, the problem is that we're having too many passes and we need to be a bit more restrictive. Okay, so how am I going to do that? You can play with that by using the probabilities. Okay, so instead of 30 and 25, let me try to lower this to 25 and 20. I'm just going to lower those probabilities of break even and probability of in the money, and that will force the range to be widened a bit. Okay, so let's see that bit, how much it helps. And from there, we will conclude if that was enough or not. 740, 740, 740, 770. Yeah, no, it's not good enough. And there are still many, many, many passes. So let's go ahead and be a bit more dramatic. So we'll do 15 and 10. Maybe I went too far now, but let's try, because this is gonna basically force the range to be wider. Okay, now, so 760, 770, 820, 599. Oh, that fell. I went too low. Yeah, it seems that we are not getting the premium we need, guys. Yeah, we are not getting the premium we need. We get to 700 something and 600 something, but we don't get to the levels we need. We need at least 800 above, which is here, and that value below. Okay, 568. Okay, so we're not getting that with Tesla. So it seems that maybe premium, since Tesla is moving up today 3%, I guess the premiums are shrinking. And while the implied volatility has grown a lot in the last 5 days, as we have charted for, as we have scanned for, is not enough to justify the trade from a reward to risk ratio point of view. So we look at Boeing with earnings on October 27. Earnings on October 27 right here. And we have UFOs here. So I'd like to check around this price point. This is August 3. So I'll start with August 3. Okay. We also have UFOs here, which coincides with this one. So I will also look at, just like what we did a moment ago with the prior trade with Tesla, we looked at September 10 and September 3, okay? 800 was the upper part of the range for this trade to be profitable. So the upper and the bottom part of the condor, so 800 was the upper. And we didn't have a break even on the trade to surpass 800, right? So the break even, see, break even up was 765, 7 something, but none of them reached 800, giving us a green light on the return on investment. So basically, we conclude there is not enough premium. That was the end result. That was the answer for you, Mario. Okay, so anyway, so now we have Boeing. So now I'm going to move to the 55-minute time frame and do what we do. Okay, so we got 51% or more, so that's great. Here are our lines, plenty of UFOs above and below. So from a setup point of view, it looks relatively easy. Okay, I guess that if we use that UFO and we use that UFO, we are not exactly centered, but almost. So I would say good enough. So that's 195, and this is 252.5. Okay, something like that. That's the break-even points we will need for Boeing. And in order to get this trade working with Boeing, so BA, so we are going to be looking at expirations of September 10, September 3, and August 27. It's exactly the same thing we started with when we did the trade before, okay? So now, minimum range, 2.5, great. Maximum range, Boeing is trading at 222. You know what, I'll go all the way to 10, okay, and see what happens. So, let's go for it. Of course, my settings here are very much extreme because I went for 10 and 15% on the probabilities, which is, I was trying to widen the range, but there was no premium enough. So I'm just going to go back to my normal parameters and now filter out these. And it seems that with August 27, nothing is working. Oh, wait a minute. Yeah, okay. I didn't do the trades. Okay, let's do it now. So update. So I just generated 99 condors. I noticed lack of trading in many of the strikes without bid prices. Okay, in any case, some of them do pass. Some of them are August expiration. Okay, so maybe it's not too bad. Let's take a look at the chart. So we want the upper part of the range to be 252.5. So let's see. We got 230, 230, 230, 230, and now we get into fail. Okay, 240 is the best it gets, and therefore I would guess that August 27 will not work. So then I'm going to move to disabling August 27 like we did before. I am going to go ahead and change the filters as well to force the range to be just a bit wider with the probabilities. Okay. Okay, update. Will be 99. We will update, and then we will sort. Only one passes. September 10, 203. Yeah, doesn't work on the upper side and the bottom side. And we can see here 29%. Yeah, so it's not good enough. We are not getting enough premium to justify the range. Even if I do my probabilities to be a bit less, like let's say 20, 15, for example. So now everything fails, okay? And let me sort just in case. But you can see now everything fails, meaning that the parameters of return on investment are not being met. And while we can create a wider range, then the condo would pay too little to accept it. Okay, so yeah, the target date. Thank you for that that catch, Siderman, but it doesn't matter because I am looking at the column return on investment at expiration, right? So even if I selected target date 827, which is the column next to it, okay, it's not relevant to me. It's not what I was looking for at the moment. Okay, and also in my settings, I have return on investment on expiration. I don't have return on investment on the target. Okay, so this is what's on the template. Okay, this is what is on the template when you load it. Okay, return on investment on expiration. So it's all good. What's not good is that premium is not enough. Okay, so we're gonna go for the next one. Okay, and the next one in line is GIS. I should say JIS. So daily time frame. Okay, so here we have it. Oh, only monthly expiration dates, no weeklies. So I'm just gonna pass. We got Netflix, we checked that before. Boeing, we saw it before. What about Merck? Merck with earnings on October 26. Yeah. So well, we can do many things here. Now this is a lower price stock. So because it's lower price, the options are cheaper as well. That UFO is lining up with that date, which is beginning of October. So let's begin. Okay, and I'm gonna be just a bit more pragmatic on how to build the trade here. I'm just gonna use 2 expiration dates only for now, which is September 10 and October 1st. And the reason why is because October 1st is lining up with that UFO and September 10 is lining up with that UFO. So I'm going to start with those. If it works, great. If it doesn't work, then I can try any other expression in between. As long as it's October 1st or earlier, it's all good. Okay, but I will start my analysis with those two. So loading the 55-minute time frame, we got 58% probabilities. This is very good. Here are our reference lines. So let's begin. I would indeed like to find a UFO a little lower. Do we have UFOs lower than that? Let me see. Wow, we need to go back in time like crazy far away to get lower UFOs. So yeah, so here's what I'm gonna do. Because the bottom UFO coincides as well with the daily UFO, you can see that bottom part here. So I'm just gonna rely on the on any date which is prior, okay, to that September 10, and use that bottom UFO as my very bottom one. Okay, so that's what I'm gonna do. So measuring the distance from the current price to the bottom part of the range and transporting this or transferring this to the upper part, I think it's pretty clear, line up pretty well with that UFO, and therefore the setup implies those. Okay, now I obviously don't feel comfortable now using October 1st expression, because basically October 1st, which is right here, it's kind of already surpassing the limit, right? So it means that you get into the iron condor today, and then tomorrow you need to start doing tweaks. Okay, so it's too much. So now I'm gonna have to use anything which is a prior expiration or sooner. So all the way to September 24, I'm fine, but not beyond that. Okay, not beyond that. So let's go, and the range will be 85 to 72, something like that. That's the range that we are betting on. So good. So Merck, we change the symbol to Merck, MRK. One. Let's go for all those expiration dates. Okay, so from August 27 all the way to September 24, we're gonna try multiple condor setups. Minimum range is 1, maximum range, I'm gonna make it 5. I'm not gonna go above 5 because this is a $78 stock. So maximum risk I want to take is 500. I'm gonna update, okay, and with that update, I will also go ahead and build 99 of those. And with those 99, I got my Iron Condor preferred parameters loaded. So I'm going to go ahead and sort and see what we've got. So we got multiple passes, okay? Now again, going back to the chart, we need to pass up to 85. 85 is the minimum. So we got 80, 81, 82, 85 is here, but that fails. Okay, So yeah, so not looking good. So I'm gonna go for a little bit further out expression. I'm gonna skip 2 just to save time because of the time. Okay, and with that, I am going to resort. Okay, and look at the numbers again. 83 is the best I get so far. 83.3 is the best I get. And in the bottom part, I got, this is 72, and the bottom part, I got 72 something. Wow, this is really close for this to work, but it's not working. And the ones that are almost working are September 10 and September 24. So let me give it a second look. So September 24 is the one we use. September 10 is here. So if I was to focus on September 10, maybe a bit more premium in that one. Again, going back to the 55-minute time frame. So where are we at? Yeah, so I could attempt to do a condor from here to let me see, one sec. I'm not sure if I move the line or not. So the upper part is here. September 10, yes. So September 10, and then if I look at the 55 UFOs, we got 1 and 2. Yeah, so the third is up there. So we would have the same problem with 85. So yeah, so it doesn't work. Merck is not giving us enough premium. So then we're going to check another one. Let's look at UPS. Let me see. Yeah. I'm just looking at the list, guys. So UPS. Okay, so here's UPS. Okay, so let's try this one, guys. And if it doesn't work, we'll call it a day, okay? It seems that there is a significant drop of premium in some of the stocks. We're going to be looking at this expiration date, which is September 10, and this. Okay. Yeah, let's take a look at that. You guys are very silent the whole session, guys. I get it. You're probably following and everything. But again, it would be very appreciated if you could be a bit more participative. 51%. Let me see. What do we have above that price point? Oh, wow, this is kind of all-time high. And when we look at the 55-minute time frame, I got the right probabilities, but I don't have anything above. So what if I look at 89? I need a UFO above that line. If not, it's going to be difficult. Okay, so just loading those 5,000 bars. Here we go. So that's 47%. So that will not work. Okay, so the way to make it the way to make this work will be, instead of using September 10 expiration, what if we use September 3? That is going to narrow the range and allow us to use that other UFO with a shorter expiration date, assuming we have enough premium. Assuming we have enough premium, the trade will justify itself. So this would be the location for the upper part of the range, that UFO right here, and that would be the one below. Okay, so this trade is not exactly centered. If we do it like that, okay, it's not exactly centered. Center would be just a bit lower, but we have 2 UFOs above, 2 UFOs below, so that works. So let's give it a try, and if it doesn't work, then we'll continue tomorrow, my friends. I guess there are days like that, even though now we have tools to find trades way faster than before, isn't it? Today it's a bit, it's one of those days that require patience. Okay, so I want to look at September 3 and August 27. $196 stock, minimum strike price increment 2.5, maximum, I'll keep it as 10. We're gonna update and create 99 condors. And as all of these has been created, we're gonna sort it. And now we can see many passes here. Okay, so now let's take a look at the ranges. So the upper part is 212.5. We got 210, 28. Yeah, so August 27 is not helping. So we're gonna shoot for September 3 only and see if that works or it doesn't. Okay, 203, 208, 210. Yeah, so the higher it gets when it comes to working is 210. My last attempt here is going to be a bit more relaxed with the probabilities. I should say a bit less relaxed. Okay, and now nothing shows. Okay, nothing shows. So I cannot get a wider range with the premium that I need, guys. Okay, so hey, we got many no's today. Again, bit frustrated, if it's okay for me to say it publicly, because again, I just cannot wait to get more trades in the account that we used to have, so we can learn more stuff as well. But hey, the rules are the rules. We have a tool that allows us to assess more trades faster. That's good, but if the market is not giving you the trade, you have to remain just as patient and disciplined as always. Okay, so that's, I guess, is the lesson today, and therefore we are just gonna call it the day now and continue tomorrow with more trades. Okay. Any final question or comment from your end, guys? I'm just looking at the multiple chat boxes. Let me take a sip of water, and if there is anything you'd like to ask before we go, or maybe you don't have anything to ask, but you'd like to say something, this is your time, and then we will call it a day. Okay, so it doesn't seem that. Thank you, Joanne. That's very good. Siderman, thank you so much. Well, I love your positive approach, Siderman, and to be honest, you are absolutely right. Okay, we learn through repetition, so and trading is a lot about confidence. So repeat builds up the skill and the confidence. Okay, so I'm happy you don't mind when we have a day like this where we looked at multiple things but we didn't have a trade to be executed. You know me from prior sessions. This really bothers me. Not as a trader. As a trader, I'm fine with that. The market will give me whatever it has to give me, and I'll take it, and I'll be very grateful. But when we do the sessions together, and we only meet twice a week, so I always want to give you as much as I can. And yeah, when it's not possible, so then it's a bit frustrating. Okay, but hey, we gotta manage those emotions, not only in trading, in life too. So it's all good. See you tomorrow, my friends. Same place, same time. You guys take care. And Jeff, if you're watching this recorded, I was ready to answer your question, even though I needed a few more details from you. So maybe you're watching this recorded and you will join tomorrow. So make sure you are ready to type those additional comments I need from you. I put on an email so I can give you a proper answer tomorrow. Okay. You take care, and everybody takes care, and I will see you tomorrow. Bye bye, everyone.